In this video, we're going to look at how you can read a price chart. You see, I see far too many people out there looking at specific candlestick patterns and looking to trade price action without actually really understanding how to read a price chart and what's really going on within a candle. So, I meet people that might be able to name me every single one of Steve Neeson's, candlestick formation patterns, but they don't really understand what goes on behind them. So in this video right here, I want to take a moment just to talk to you about what makes up a candlestick chart and really what is the psychology of the market that's taking place in any particular candlestick pattern, because it's not just about understanding the pattern and knowing what a pattern is, it's really understanding what that's telling you about the market and looking at the overall context of the chart to be able to make the right trading decision. So if you're somebody that's trying to trade price action and you haven't had that much success so far, then this is a video you really need to pay attention to, because I think once you understand some of the dynamics of what's going on, rather than just trying to, sort of like monkey see, monkey do, be able to name every single candlestick pattern there is out there, then I think that your trading is going to improve dramatically. But before we get into it, make sure that you have subscribed to this channel. So if you haven't already done so, hit that subscribe button, and then next to it there's a little bell icon. So hit that bell, and what will happen is you'll get a notification as and when I release a new video. So you'll be able to stay abreast with all of the videos that I release and learn everything that there is to know about trading the financial markets, the sports markets, and anything else that I want to put out there. Okay, so with that being said, let's now jump over to the chart and let's take a look at what the candlestick patterns are telling us and what a price chart tells us about where potentially that market is going to go, and ultimately then how you can make money with that information. So what we have in front of us is a CAD franc chart, and I haven't picked this one specifically. It could be the franc yen, it could be the euro CAD, it really doesn't matter. What we're interested in is is what's going on this chart itself, because once you understand this information, you'll be able to trade absolutely any instrument out there, because they all look the same, they don't behave similarly, but once you understand what a candlestick is telling you about the price and potentially where it can go, that's universal. That's going to remain the same across every different currency pair, across every different instrument. So whether you're trading Bitcoin, the Dow Jones, whether you're trading Amazon, Google, really doesn't matter. Once you have these concepts down, it's going to improve your trading regardless of what it is that you're trading, what time frame you're trading, what time of day, what region of the world you're trading. So this is going to help you no matter what. All right, so let's take a look at a price chart. So first and foremost, let me get rid of the support and resistance level here. What we need to understand is that for the most part, we've got two different types of candles. So we've got what we would call, let's say, indecision or range-bound candles, and then we've got momentum candles. Now, the momentum candles are the candles that are going to drive the price in a particular direction. And the momentum candles are quite easy to spot because typically they will have a large body, all right, or they will have a very large wick on one side. So the thing with a momentum candle is that it shows you that at least towards the end of the candle, that one party was really in control, whether that be the buyers or the sellers. By the time the candle closes, you should have a clear indication of who most recently is in control. And what I mean by that is if we zoom in here, let's take a look at these candles here. So we can see that when the market moves sideways, if we look at this, so if we look at, let's get a pen out here, this little section of time here, when the market is moving sideways, the bodies of the candles are quite small, okay, relative to what a momentum candle. So this I would term as a momentum candle. It's got a nice big body over there, okay, and something like this. Oops, not a very good drawing, but I guess you see what I'm saying here. This over here, I would consider that to be more of an indecision candle, more of a range candle, and that we don't really know which party is in control here. We don't know, where the next move is going to be. All right, so that's the first thing. So we need to be able to differentiate between indecision candles and momentum candles. And typically we want to be in the markets when momentum candles are printing. And that's the key to trading. Is we need to try and figure out, what are the early warning signs of a momentum candle going to print. And that's where we use things like support and resistance levels. That's where we look at the context of the rest of the chart to be able to make that decision. Because ultimately, if you can figure out where candles like this are going to occur and when they're going to occur, you're going to make money. And that's what trading's all about, essentially. All right. So these are our range-bound candles. And you can see that they're sort of characterized by large wicks either side of them, and small bodies. So we don't really know who's in control over here. All right. I mean, you can argue. So let's say, for example, if we look at this candle here, we can argue that this is probably a bearish candle because yes, we've got a large wick one side, but essentially the market was bullish at one point in time. Then the sellers managed to push it all the way back to the open and then lower than the open, so that the close of the candle was lower than the open, therefore printing a bearish candle. If we then move on and we see things like this candle over here, we can see that, okay, this is momentum. This here is momentum. This here is momentum, and so on and so forth. All right. Here we get a little bit of indecision, these candles over here. But then when the market breaks that low, then we get another momentum candle. All right. And that's why traders, they look for breaks of support and resistance levels, because they understand that that's where the orders are going to be clustered, right? So at support and resistance levels, the dynamic that you get is, let's say we're at a support level, okay? What you're going to get is at that support level, you're going to get a lot of stops, all right, clustered from the buyers. So anybody that was buying at the support level, when that support level is broken, they will want to get out of their position because they'll say, okay, support's broken, I don't need to be long anymore. Now, to get out of a buy position, you have to sell the markets, right? And that's what happens. So you'll have a sell order stuck below that level. In addition, you'll have traders, breakout traders, that say, once the support level is broken, I want to get involved in this market. So I'm then going to be a seller. So then you have additional sell orders clustered below that support level. And the same is true of a resistance level. And a resistance level, if you get a lot of sellers selling below resistance, above that level, you'll have a lot of buy orders, because for the sellers to get out of their trades, they need to buy the market. And in addition to that, you'll have buyers, breakout buyers, that are saying that once the market breaks above this level, I want to be a buyer as well, because I think that's where the momentum is going to be. And you sort of get this self-fulfilling prophecy, okay? And that's why when you get breaks of support and resistance levels, you do expect momentum, because you expect all of those orders to be clustered there. And if you don't get the momentum, then that's a little bit of a clue to say, you know what, things aren't quite what they seem. We were expecting momentum at this level. We haven't got it. So maybe you want to close that position early. Maybe you want to take some of the risk off the table. So you leave half of the position on to run, but you want to take some off because it's not giving you the momentum that you want. But essentially, they're the sorts of early warning signs, okay? So every single candle is going to tell you something about that period in time. And the most important thing is it tells us who's in control of the market. So when we have a trend, if we look at this trend here, we can see, let's get rid of that for a minute. When we have a trend, we can see that we get nice momentum candles pushing the market lower and lower and lower. And yes, you do get some pause like you do here. And then once that support level is broken, the market goes lower again and lower again. And then eventually the buyers come in. And this isn't necessarily a trend changer, by the way. This is something that a lot of people get confused with, is that they look at it and they say, oh my gosh, there's, the market is pulling back. That must mean that the trend has changed. But no, you have to understand that in the markets, you get algorithms and things like that, but algorithms are based on human beings, and human beings will react the same way over and over again. And what happens is, when they get a lot of profit on the table, they want to book those profits. They want to protect some of those profits. So what they have to do is, if they were selling the market, so in this example here, we can see that the market is, we've got sellers in the market, so the market's selling off. This pullback here is nothing more than the sellers taking profits. All right, and to take profits in your sell position, you have to buy. All right, and we can tell that it's profit taking because we don't really have that much of a follow through. The market hasn't gone all the way up here like that. It just come back for a little bit and then it sells off again. And even here, when the market pulls back, it pulls back a little bit, but it's you know, it's a 50% move of the previous move. So if I was to go in here, let's make sure that's Fibonacci. If I was to go in here, so if we go swing high to swing low like this here, we can see, yeah, see, exactly 50%. I don't even need the Fibonacci there. I can tell by looking at it. We got a 50% retracement here. So it's not even, you know, 78% of the move right there. So the market, again, that's profit taking, and then the market's going to turn around and go in its, you know, in its merry direction. And as traders, what we want to do is we want to be able to read the candlestick so that when we see this sort of a pullback here, we can say, okay, so we've got the market pulling back somewhat. And this is where I said that you need to use context, right? So you use support and resistance levels, Fibonacci retracements and things like that to identify areas where potentially the market is going to turn around, all right? And this is one of those such areas. So we come to this area here, we say that this is a 50% level. I'm going to look for a candlestick pattern around that level. We get a bearish engulfing candle over here. We also get a momentum candle over here. So you've got two entries, okay? Two potential places that you can enter at that particular point in time. We get the momentum candle, we get the engulfing candle here, we get the momentum candle there, and then sure enough, the market goes off and it sells off. Okay, and that's exactly what we're looking for. And if you're a price action trader and you can look at the overall context of the market and you can look at the support and resistance levels and you understand what these candles are telling you. So this is a bearish engulfing candle, but actually what is it telling us? Well, let's read the engulfing candle. Okay, so prior to that, and it's always important to look at the price action prior to the candle that you're looking at. But prior to that, the market was rallying. The market, the bodies of the candles, as it was getting towards the exhaustion point, are getting smaller. All right, as we can see here. So the market is rallying. The body starts to get smaller. We get a big momentum candle to the upside there. Then the body gets smaller. And then we get a downside, so a bearish momentum candle, an engulfing candle here that completely engulfs the body and actually pretty much the whole of this previous candle here, which shows us that for this period in time, and we're on a daily chart, this green candle, this is what the buyers were able to do. But the day after, the sellers were in far more control on that day than the buyers were on the previous day. So that's kind of like a bit of a clue to say we're at a 50% retracement level. We're at a previous level of support, which could become resistance in and around this area here. Okay, so we're at a support and resistance level as well. Now we've got the sellers coming to get involved in the market. We know that the previous move, so this down move here, obviously it was seller dominated. They all made the money on that move there. So all of the sellers here are going to remember making those profits. They will have booked profits in this move up to here. And then when we get this bearish engulfing candle, well, you know, there's only really one outcome, and that's the sellers are going to take it down. Maybe not to, you know, to the extent of the previous moves there, but it's at least going to try and attack the previous lows that they were able to get to. So you kind of know that you should have a little bit of an opportunity to make profits there. Okay, so I hope that makes sense for you. I know obviously it's a lot to take in, but what I'm trying to get across in this video is really that you need to understand, you need to try and read what the candles are telling you about the price action, rather than just trying to name all of the, you know, the candlestick patterns that are printed out there in Steve Nissen's book, and other people may have invented new ones since, you know. But essentially what's important isn't the name of that pattern, but is what is it telling us about the chart? What is it telling us about what's going to take place next? And when you include that with other things like building context and support and resistance and Fibonacci retracements and things like that, once you start to include all of that into your trading and into your trading plan, that's when you'll start to make some real progress in terms of the results that you're getting from your trading. Okay, so I hope you enjoyed this video. If you haven't subscribed, hopefully you'll want to subscribe now. You'll see that the kind of content that I put out there is stuff that you want to be watching if you want to improve your trading. So hit that subscribe button and then hit the bell so that you get a notification as and when I release a new video. And if you did like the video, please hit that like button and feel free to ask me any comments beneath the video here. So post it in the comments beneath and I will try my best to answer your questions. Thanks so much for watching, and I will catch you in the very next video. Take care now.